Fibonacci retracements, honestly, one of the most important tools that you will ever find in TradingView or that you would need in the stock market. If you want your trading to improve and start cranking in these bigger wins, the Fibonacci is where everything starts. For example, we just look at this chart right here. What do you see? We don't really see anything. We see a big uptrend over here that changed to a downtrend. But now, use the Fibonacci retracement from the high to the low. What do we see? Price came right into discount, which means once it comes into discount, it often retraces and continues their trend downwards. So just with this information, you already get an additional confluence that can add on to your strategy. Fibonacci should always be an addition to your strategy. They should never just be used alone. So the Fibonacci, this is exactly what it is. You guys might see maybe an uglier version of it. These are my settings. You can just pause the video and copy these down. But right here, this one is gonna go to your high. This 0 is gonna go to your low. Right here is where the magic happens. This is the most important part of the Fibonacci retracement. For example, say you have an uptrend. You have a break of structure right here with a fair value gap. Now we think this is gonna go up. But let's add the confluence from the lows to the highs. And what do we have? Right at discount at the 0.5, which tells you that there's a higher probability that this stock will continue in your favor. And this is how you place it on the chart. Say this is what we're looking at. We have the break of structure right here, and then we have the fair value gap right here. Now let's add the extra confluence from the high to the low right at the 0.5. And right here, we take our short position for the low. But now another thing, Fibonacci's can also look like this, which is actually called a standard deviation. Standard deviations is what helps you target higher take profits and makes you maximize the overall move of the trend. So you might say, what do you mean by that? That doesn't make sense. With the break of structure and the fair value gap, it came to discount right to the 0.5. But now using the standard deviation, we can see where our take profit is going to be, which is going to be right at this -2. And you see how perfectly this played out. If the standard deviation wasn't there, how would you know where to take out? If you're a more experienced trader, you would know that you would take out at the previous lows. But if you're still a beginner, standard deviations are an amazing help to find take profits. Depending on how the trend is moving and if it's a strong trend, -1 should always be partial profits, -2 should be full profits. If it's a very strong move, you can always target the -4. But be careful because -4s get rarely hit. I really hope you enjoyed this video and you understand how Fibonacci's work. And before I let you go, these are my settings on the standard deviation. I hope you have an amazing day and let me know in the comments what you want next.